Okay, when you think of a 130-year-old bank, you probably don't picture cutting-edge AI or a startup-style growth curve, right? But today, in this explainer, we are unpacking a literal seismic shift that happened in July of 2026, a shift that completely rewrote Japan's corporate landscape. We are talking massive numbers, aggressive global expansion, and some seriously cool technological innovation. So let's get right into it. For the first time in over 3 decades, a bank has actually claimed the throne as Japan's most valuable company. Mitsubishi UFJ Financial Group, better known as MUFG, officially blew past legendary automakers like Toyota and tech giants like Kioxia Holdings to take the absolute top spot. I mean, a bank dethroning Toyota? That is huge. And the sheer scale here is just staggering, 42 trillion yen. To put that into perspective, that's a market cap of roughly 259 billion US dollars. The main rocket fuel behind this surge? The Bank of Japan's interest rate hikes. Those rate changes just totally transformed the game for the banking sector. To give you an idea of the leverage we're talking about, MUFG estimates that for every tiny 0.25% bump in the policy rate, their earnings jump by a whopping 180 billion yen. So how did they pull this off? Well, here is our roadmap. We are going to look at Japan's new corporate king, dig into that record-breaking financial growth, track their ambitious global expansion, check out how they are pioneering blockchain and AI, and finally, wrap up with the road ahead. Kicking things off with part 1, Japan's new corporate king, and that massive paradigm shift in 2026. Moving right along to part 2, capitalizing on that incredible financial windfall. Look, market analysts had pegged their Q1 median net profit at a healthy 633 billion yen, but MUFG completely shattered those expectations. They pulled in an actual result of 809.43 billion yen. That is around $5.2 billion in profit in a single quarter. It represents a massive 48% year-on-year increase. And this wasn't just a lucky break in one department. It was broad-based. Higher loan margins, super strong fee and trading income, and a really successful strategic partnership with Morgan Stanley all contributed to the whole shebang. And honestly, they are stepping on the gas. Gross profit for that first quarter alone hit 1.74 trillion yen, up 28%. Looking ahead, MUFG set this wildly ambitious full-year net profit target of 2.7 trillion yen for the fiscal year ending March 2027. That'd be an 11.2% jump from the previous year. Now, keep in mind, these aggressive projections do assume the policy interest rate hovers right around 1%. You know, usually with explosive growth like that, you start worrying about stability, right? Well, not here. By the end of June 2026, their Common Equity Tier 1 capital ratio, which is basically the global gold standard for bank safety, was sitting pretty at a rock-solid 12.95%. That ratio actually went up during this growth spurt. So they are growing at lightning speed, but they remain incredibly well-capitalized while doing it. Which brings us to part 3, their super ambitious global expansion, pushing way beyond Japan's borders. Geographically speaking, they are making moves everywhere. Over in Europe, they are simplifying things by merging their securities and banking arms into a single Amsterdam-based hub to serve the EU way more efficiently. In Asia, they are laser-focused on the rising wealthy class, rapidly expanding their wealth management services. But the absolute crown jewel of this whole strategy, India. MUFG dropped $4.4 billion for a 20% stake in Shriram Finance, gaining access to a massive network of over 3,200 branches. That makes it the largest foreign investment in India's financial sector, ever. Why India, though? Well, Deputy Chairman Yoshishi Itagaki really hit the nail on the head here. He explained that with all the geopolitical risks and shifting global economies right now, tapping into India's massive domestic demand isn't just about making money. It's a critical strategic hedge. It's an anchor in a stormy sea. And this Indian deal, it is a brilliant two-way street. By matching MUFG's massive capital with Shriram's unmatched rural lending network, they're actively unlocking entirely new markets deep within rural India for domestic Japanese manufacturers. It's basically a masterclass in using local footprints to fuel global reach. Okay, let's switch gears a bit for part 4, pioneering blockchain and AI to build next-gen finance. To really grasp what they're doing here, we need to understand a concept called atomic delivery versus payment.
Right now, massive bond trades happen on a delayed cycle. You hand over the bond today, but wait for the cash tomorrow. It's clunky. MUFG wants to kill that delay entirely. Atomic delivery versus payment means the transfer of the asset and the cash payment happen in one single simultaneous instant step. Zero delay. And they are already on the clock. Back in August 2026, MUFG launched a real-time blockchain proof of concept for this exact thing, using the Canton network. They expect to wrap up testing by the end of 2026, and they are targeting a full commercial rollout between 2027 and 2029. This is the kind of tech that could fundamentally change how Japan's massive financial markets operate. But wait, it gets better. In a move that makes them look way more like a Silicon Valley tech startup than a legacy bank, MUFG forged a major strategic partnership with Google. They're literally piloting Google's Gemini AI directly on their financial platforms. The endgame? Building a completely next-generation payment and retail infrastructure straight on Google Cloud. A real game changer for sure. Finally, let's look at part 5, the road ahead, and the leadership vision driving all this. You have to meet the guy steering this massive ship. Chairman Hironori Kamezawa. In May 2026, his work was recognized globally when Tab Global named him Global CEO of the Year and MUFG snagged Global Bank of the Year. Since he took the reins in 2020, he has totally rewired this institution to be far more globally connected and hyper-focused on returns. So how exactly did he pull off a turnaround of this scale? It came down to ruthless portfolio optimization to boost earnings, combined with aggressively expanding their Asia-Pacific footprint. But honestly, the hardest part, especially in legacy finance, was the cultural shift. He championed agility, pushed hard for that AI adoption we just talked about, and built a culture of strict accountability to make sure they secured this dominant position. Which brings us to a really powerful thought from Deputy Chairman Itagaki. He recently said, "We've reached about the halfway point, but we're still only halfway there." Just like that simmer for a second. If pulling in $5.2 billion in a single quarter, dethroning Toyota, dropping billions in India, and literally reinventing bond settlements on the blockchain represents just the halfway mark, what on earth is the future going to look like when MUFG finally crosses the finish line?